Hey everyone, welcome back to Move Smart USA. Today we're talking about something I'm really passionate about, turning your homeownership dreams into a reality. Specifically, we're heading out of the city and into the beautiful countryside. A bit of land, some fresh air, a star-filled sky. A lot of people think buying a home with that is out of reach, especially without a massive down payment. That's where the FHA loan comes in. It's a powerful tool that can open doors you might have thought were permanently locked. So what is it? An FHA loan is a mortgage that is insured by the Federal Housing Administration. This government backing gives lenders the confidence to approve loans for buyers who might not meet strict conventional requirements. It's not a loan from the government, but rather a loan insured by it. Think of the FHA as a safety net for your lender, because the lender knows the FHA has their back if you default. They are much more willing to offer favorable terms. The primary goal of the FHA program since the 1930s is to make homeownership more accessible. Low to moderate income borrowers, first-time home buyers, people who have less than perfect credit scores. Rural properties often come with their own unique set of circumstances that can make conventional financing a bit tricky. Sometimes the properties are older, or they might have features like a barn or a large acreage that don't fit neatly into a conventional lender's appraisal box. FHA loans, however, are designed with a bit more flexibility. The FHA has specific guidelines, of course, but they are often more accommodating of the types of properties you find outside of major urban centers. This means that charming, slightly quirky farmhouse with a wraparound porch might be a perfect candidate for an FHA loan, even if a conventional lender hesitates. Another major advantage is the more lenient credit score requirement. Let's be honest, life happens. Not everyone has a perfect 800 credit score. A medical bill, a period of unemployment, or just the challenges of managing finances can leave a mark on your credit history. While conventional loans typically require a credit score of 620 or higher, and often much higher for the best rates, FHA guidelines allow lenders to approve borrowers with scores as low as 580 for the 3.5% down payment option. For borrowers with scores between 500 and 579, it's still possible to get an FHA loan, but a 10% down payment is required. Not just cookie-cutter suburban houses, that charming farmhouse rustic cabin key feature the low down payment. Conventional loans often expect 20% down. On a $300,000 home, that's $60,000. FHA loans allow down payments as low as 3.5%. On that same $300,000 home, you'd put down $10,500, much more achievable. This feature often decides whether a family moves from renting to owning. It's not free money. There are standards and costs. Because you put less down, you'll pay for mortgage insurance, called the mortgage insurance premium, or MIP. This fee funds the FHA's insurance program. You'll pay a portion upfront at closing. Another portion is added to your monthly mortgage payment. Sometimes the MIP lasts for the life of the loan. It's an extra cost, but it enables low down payments and flexible credit. For many, it's worth it to get the keys to their dream rural home sooner rather than later. Before you even start browsing online listings for that perfect country home, the very first step is to take a good, hard look at your own finances. This is the foundation of your entire home buying journey. You need to know where you stand before a lender tells you. Start by getting a copy of your credit report. Equifax, Experian, TransUnion. You can do this for free once a year. Go through each report with a fine-tooth comb. Look for any errors, like accounts that aren't yours, or, late payments that were made on time. Disputing these errors can sometimes give your score a quick and significant boost. Once your financial ducks are in a row, it's time for the exciting next step, finding a lender and getting pre-approved for your FHA loan. It's crucial to understand that not all banks or mortgage companies offer FHA loans. You need to work with an FHA-approved lender. You can find a list of these lenders on the HUD website, but a great strategy is to ask for recommendations. Talk to real estate agents, especially those who specialize in rural properties. They will know which local banks, credit unions, and mortgage brokers have a solid track record of successfully closing FHA loans in the area. Experience matters, especially when navigating the unique aspects of rural real estate. Don't just go with the first lender you talk to. I recommend contacting at least 3 to 5 different FHA-approved lenders. When you speak with them, you're not just asking about interest rates, you're interviewing them. Ask about their experience with FHA loans for rural properties, their typical closing times, their lender fees, and their communication process. You want a loan officer who is responsive, knowledgeable, and willing to walk you through every step of the process. After you've chosen a few lenders you feel good about, you'll begin the pre-approval process. You will submit a formal mortgage application and provide pay stubs, tax returns, bank statements, and other financial documents. The lender will perform a hard credit check and analyze income, assets, and debts to determine your loan amount. A pre-approval means the lender has done their homework and is serious about giving you a loan. With your pre-approval letter in hand, the house hunt officially begins. Find a real estate agent who is an expert in rural properties and who has experience with FHA buyers. Don't use your cousin who just got their license and mainly sells downtown condos. A rural specialist understands well in septic systems, zoning regulations for agricultural land, property boundary issues, and the specific requirements of an FHA appraisal for non-traditional homes. Keep the FHA's minimum property standards in mind as you look. An FHA appraiser will do a detailed inspection. They'll check the roof, the foundation, heating, and electrical systems, and for hazards like peeling lead-based paint in homes built before 1978. If standards aren't met, repairs will likely be required before closing. Say you find an almost perfect farmhouse, but it needs a new roof and an updated kitchen. A standard FHA loan won't work. A 203K rehab loan lets you roll repair and renovation costs into your mortgage. It's perfect for fixer-uppers and avoids a separate construction loan. Using an FHA loan means your offer includes an FHA financing contingency. That clause says the purchase is conditional on the property appraising for at least your offer and meeting FHA's minimum property standards. If the appraisal is low or the appraisal identifies repairs the seller won't do, the contingency lets you walk away and get your earnest money back. It's a crucial layer of protection for you as the buyer. Buying a home in the country is a bit different from buying a house in a subdivision. There are unique challenges, especially with FHA loans. One of the biggest is wells and septic systems. FHA has specific requirements: adequate distance between well and septic, sufficient potable flow, and a water quality test. Another hurdle is the property's condition. Appraisers may flag a dilapidated barn too close to the house, a leaky roof, a non-functional heating source, or your unsafe electrical wiring. If repairs are required, options: seller completes repairs, use FHA 203K, or walk away. Appraisals can be more complex in rural areas with fewer comps, which can lead to lower appraisals. Options: renegotiate price, cover difference with cash, or cancel. Finally, think about access and utilities. Safe all-weather access, availability and cost of utilities, high-speed internet or satellite, electricity reliability, and propane or heating oil costs. You've navigated the prep, found a lender, survived the hunt, and made it through the appraisal and inspection. The final step is the closing. A few days before closing, you'll receive the closing disclosure. Review it carefully and compare it to your loan estimate. You have 3 business days by law. On closing day, you'll sign the note, the mortgage or deed of trust, and other disclosures. Bring your certified funds for down payment and closing costs. Take your time and ask questions. After the last paper is signed and funds transfer, the seller hands over the keys. It's a moment of incredible accomplishment and excitement. The path to home ownership can have twists and turns, but with the right team and the flexibility of FHA, you can make it happen. You've invested in a new lifestyle and a place to call home, surrounded by the peace and beauty of the countryside. Congratulations.